How to survive long-term in the crypto world. Hello everyone, back again with Mr. Suw Crypto. This time, we're not just discussing price fluctuations, but also covering important aspects that are often overlooked. Mindset, survival strategies, and how to play the long game to avoid becoming a victim of seasonal hype. Alright, let's start with the harsh truth first. Most people who enter the crypto world fail not because they're stupid, not because they lack capital, and not even because the market is a scam, but because they have the wrong mindset. They enter the market like someone speeding on the highway, without brakes, without GPS, and hoping to finish first. But when the market takes an unexpected turn, they panic, jump into random coins, get margin called, and give up while saying, crypto is gambling. The reality is, it's not crypto that's wrong, but the approach. They're playing a long-term game with a short-term mindset. They enter today, hoping to become a sultan next week. But as soon as the market retraces by 20%, they give up, look for a scapegoat, and go back to their old routines. Here's the thing. Imagine buying property in 2000, in the middle of a rice field. No one was interested. But 2 decades later, suddenly it's the city center. Well, crypto is like that. You can buy something that's like empty land now, but if you understand its value and are patient, the results can be extraordinary. So, the topic we're discussing today is super important. How to survive long-term in the crypto market. Because for those of you who are serious, who want to stay sane in the market, who don't want to be a victim of FOMO FUD every week, you need a foundation. And in this episode, we'll discuss 4 important things that will form your foundation to survive, even thrive, in the crypto world. We'll start with the most basic and often overlooked. That is, learning the technology. Because if you don't understand what blockchain, smart contracts, decentralization, and why they're important, you'll be easily swayed by the market. Chapter 1. Learn about blockchain technology. Before we discuss price increases, charts, tokenomics, or profit strategies, let's take a breath and start with the most fundamental question. What are we actually buying when we buy crypto? If your answer is just coins that can increase in price, well, we need to talk more. Because here's the thing. When you buy Bitcoin, Ethereum, or other tokens, you're not buying magic paper whose value can fluctuate like meme coins. You're actually buying a small part of a revolutionary technology called blockchain. Yes, blockchain. This term is often mentioned, but rarely truly understood. And that's a big problem. Because when you don't understand the technology, you're more likely to get caught up in shady projects that are just riding the trend. You'll buy in because of FOMO and sell out because of FUD. And worse yet, you might end up being one of those people who say, crypto is just speculation. But the reality is much bigger than that. Blockchain isn't just about coins. Blockchain is a new way to store, share, and secure data without intermediaries. And this isn't a fairy tale. It's a technological reality already being used in thousands of projects, from finance and logistics to digital identity systems. Now, imagine a future like this. Your money is fully digital, but without banks. Your property deeds are on the blockchain, impossible to forge. You can send money across borders without delays, high fees, or third parties. You can contribute to a project or protocol from anywhere and receive rewards automatically via smart contracts. Cool, right? And all of this is built on one foundation, blockchain. So, if you're serious about staying in the market long-term, you need to stop focusing on when it will rise and start learning. What is decentralization? How does consensus work? What's the difference between layer 1 and layer 2? What is a smart contract? Why are gas fees so expensive? And why can blockchain be a solution to many of the problems we have with old systems today? Is learning this technology complicated? Yes, at first. But you don't need to be a developer. You just need to understand why it's important and why you hold this coin besides because a friend said it's good. Here's the analogy. If you buy Apple stock and understand why Apple products are good, it makes you feel calm when the stock price drops. It's the same with crypto. If you understand Ethereum, you understand why ETH has long-term value. If you understand Solana, you understand why it can handle thousands of transactions per second and why many developers are moving there. And in the end, when the market turns red, you don't panic. Because you know you're not just holding numbers, you're holding innovation. You're holding a small part of the future of financial technology. Learning about blockchain also makes you more selective. You can distinguish between projects that are actually building infrastructure and those that just promise to the moon without a roadmap. You can read white papers, check smart contract audits, understand the role of validators, staking, governance, and all the things that once seemed complicated, but are actually crucial. Because ultimately, what keeps you in the market isn't insider tips, but personal conviction born from understanding. And that can only be gained if you seriously study the technology behind all of this. So for those of you listening now and thinking, wow, I only know to buy BNB because the Telegram group said it's good. That's okay. But now it's time to upgrade. Find out why BNB is used in the Binance ecosystem. Find out why some say Ethereum is the world's computer. Find out why Bitcoin is called digital gold. Learn slowly. Because once you understand, you're not just a hype follower. You become part of the revolution. If you want us to discuss blockchain in more depth, comment below. If you want us to discuss it in detail in the next episode, continue. Chapter 2. Zoom out. Use a long time frame. All right, now let's talk about mindset. How we view the market. And this is extremely important because how we view it will determine how we act. Most people enter the crypto world with a mindset that is, let's be honest, instant. They hear their friends made 1,000% profit in a week, then immediately FOMO. They buy random tokens, go all in with their capital, hoping to get rich overnight. But when the market corrects by 30%, they panic and sell at a loss. They regret it, get traumatized, and leave crypto while complaining. Crypto is just gambling. But the real mistake is just one thing. They forget to zoom out. Take a step back. Bitcoin in 2013 was only around $100. In 2017, it surged to $20,000, then crashed to around $3,000. In 2021, it rose again to $69,000. And now in 2025, Bitcoin has set a new all-time high of $111,000. Look at its journey. From $100 to over $100,000. That's not a 10% increase. It's 1,000% increase. If you zoom in on the daily chart, all you see is drama, stress, and noise. But if you zoom out to the weekly or monthly chart, what you see is a slow but steady upward trend. And this is the key to surviving in crypto. Focus on the long term. We live in an age where everything is fast-paced. Scroll through TikTok for 10 seconds. Order food in 15 minutes. See a red portfolio for 5 seconds, then panic. But investing isn't a sprint, bro. It's a marathon. And to finish at the finish line, you need a mindset that can see beyond today's red candles. To avoid getting easily shaken, you can start with some small habits. 1. Always look at weekly or monthly charts before making a decision. Daily charts make you emotional. Weekly charts make you rational. 2. Don't open your portfolio app every 5 minutes. Seriously, this is like checking your weight every time you drink water. It's pointless. It just causes stress. 3. Document your journey. Write in a journal or Notion why you bought that coin, when, and what your goals are. So when the price drops, you can just reread your rational reasons. 4. Divide your portfolio into 2 parts, short-term and long-term. Don't use everything for trading. Holding BTC, ETH, or other fundamental coins for 3 to 5 years is a much stronger strategy than just daily scalping. Why is this important? Because volatility in crypto is insane. A 20% increase in a day, normal. A 40% drop in a week, also normal. If you're not mentally prepared, you'll burn yourself out. But if you zoom out, you'll see. Short-term declines are just noise, not the end of the world. Simple example. In 2022, many people panicked because Terra Luna collapsed. Bitcoin prices briefly dropped below $20,000. But look now, in 2025, the market has recovered. Strong projects are becoming more solid. The Ethereum ecosystem is continuing to grow. Solana is getting faster. Many L2s are emerging. Innovation continues. If you quit during a market crash, you won't experience the recovery. But if you stick it out and keep learning, even if it's slow, you'll be part of those who enjoy the results later. And one more important thing, when you zoom out, you also learn not to compare yourself to others. You don't need to make 1,000% in a month like influencers who flex. A 20% return in a year is fine, as long as it's consistent and based on a strategy you understand. Remember, the goal isn't to get rich quickly. The goal is to achieve long-term financial stability. And that can't be achieved if you keep zooming in and overreacting to every candle. So, in conclusion, before you panic because the coin price drops, or get euphoric because your portfolio is green, take a break. Zoom out. Look at the long term. Because this game isn't about who's the fastest. It's about who's the most resilient. All right, let's move on to the next chapter. Chapter 3. Managing your portfolio and money management. Earlier, we discussed the importance of a long-term mindset and the need to zoom out. Now, we're diving into one of the most critical pillars for surviving in the crypto world, management. More specifically, portfolio management and money management. Let's be honest, many people don't lose money because the market is bad. They lose money because they manage their finances poorly. Imagine this. You're on a boat heading to your dream island. Crypto is the boat. But you bring all your money, even sell your house, pawn your motorcycle, quit your main job. Then you just get on a small boat without a life jacket when the storm hits? You'll sink, bro. It's not the boat's fault, but your lack of preparation. And that's why money management is so important. First, never use essential funds for crypto investments. This is rule number 1. If the money is for rent, buying milk for your child, or paying off a loan, don't touch crypto. Why? Because crypto is volatile. Its price can drop by 50% in a week without a logical reason. If you use essential funds for investment and the price drops, you'll panic. Panic makes you think irrationally, and eventually, you'll sell at a loss. Investments should come from cold money. That means money that, if lost, won't disrupt your normal life. If you can't sleep because your portfolio is in the red, that means you've invested too much. Second, separate your main job from your investments. Many are tempted to quit their jobs after making a big profit. Wow, crazy, from $1,000 to $10,000. I'm retiring. But that's just the early phase of a bull run. Then the bear market comes, and the money slowly disappears. In the end, you go back to the working world, but with a shattered mindset. The ideal approach is the opposite. Use your main job as a stable income source. Use your work income as capital to gradually top up your crypto investments. Example, if you work in an office, set aside 10 to 20% of your monthly income for investments. If you receive a bonus, you can increase the allocation. If there's no bonus, you're still safe because your basic needs are covered by your main job. And this isn't just a safe strategy, it's a long-term survival strategy. Third, allocate your portfolio. Don't treat all your coins equally. You must separate which coins are for the long term, which are for the short term, and which are for high risk/high reward. Simple allocation example. 50% in blue chip coins, Bitcoin, Ethereum. 30% in mid-cap or strong layer 1/2 coins, Solana, AVAX, Matic, etc. 20% in high risk/high reward, small altcoins, narrative coins, etc. You can adjust this to suit your style. But the principle is, don't put all your eggs in one basket. If you go all in on one coin, and it turns out to be a rug pull or fails to develop, your story is over. Fourth, understand market cycles and adjust your exposure. It's now 2025. This is the third year of the bull run cycle. That means we're getting closer to the peak phase. What does this mean? It means that if you entered crypto in 2022 to 2023 when prices were low, now is the time to reduce risk. It's not the time to get more aggressive. At the beginning of the cycle, you could be more aggressive, buy small coins, seek out hype narratives, and hold. But as prices rise, more retail investors enter the market, and the risk of a major correction increases. So this year's strategy is, take some profits, reduce exposure to small altcoins, increase stablecoin positions, move to strong assets like BTC and ETH. Remember, your goal isn't to get 1000x returns. Your goal, stay in the game when the next cycle comes. Fifth, create an entry/exit system. Most people only think about when to buy, but they never have a system for when to sell. This system could be, take profits at every 50% increase, use a trailing stop, rebalance every quarter, sell when the narrative starts to fade. What's important is that you have rules. Don't wait until you're panicking to make a decision. Sixth, know your risk limits. How much are you willing to lose from your total portfolio? Most professional investors only take 1% to 3% risk of their total capital per position. Retail investors? Sometimes they go all in on one coin. If you're trading, set stop-loss orders and position sizing. If you're investing, set the percentage of coins and don't chase new coins every week. This discipline is what will keep you healthy, mentally and financially. Conclusion of Chapter 3. Cold money equals mandatory. Main job equals capital machine. Portfolio allocation equals survival strategy. Understand the cycle equals adjust aggressiveness. Entry-exit system equals prevent panic. Risk discipline equals long-term survival. Crypto isn't just about technology and hype narratives. It's also about how you manage your money and yourself. As the saying goes, if you can't manage $1,000 wisely, you won't be able to manage $100,000 either. All right, let's wrap up Chapter 3 here and move on to the next chapter. Chapter 4. Have realistic goals. We've discussed long-term mindset, the importance of zooming out, and how to manage your money so you don't get stuck. But all of that won't be enough if you don't have one thing: realistic goals. Yeah, it seems simple. But precisely because many people enter crypto without clear and reasonable goals, they end up getting carried away, succumbing to FOMO, and getting stuck at the bottom of the Mariana Trench of their portfolio. Realistic doesn't mean pessimistic. First, let's clarify one thing. Having realistic goals doesn't mean you're pessimistic. It also doesn't mean you can't dream big. But being realistic means you understand how likely it is for profits to come in, how long it will take, and how much risk is involved if you make a wrong move. Here's an example. If you start with $1,000 and aim to make $1 million in 6 months without any skills, without a strategy, just following TikTok and YouTube, well, sorry, you're not an investor, you're gambling. But if you aim for $5,000 to $10,000 over 1 to 2 cycles, with a solid strategy, a strong mindset, and discipline, that's realistic. Don't get caught up in numbers and percentages. We often see people say, "Wow, this coin went up 200%. I should have bought it yesterday." Or, "Bro, how much did your portfolio increase by?" But it's pointless, bro. A 500% increase from $10 is still only $50. Meanwhile, a 10% increase from $10,000 is already $1,000. Don't focus on percentages, focus on real value. What matters isn't how much it's gone up, but how much you've invested and how much you can take out. If you have a clear goal, you won't get caught up in mental biases like, "I have to hold until it's 10x. It's only gone up a little, it'll go up again later. If I sell now, I'll regret it." With a clear goal, you know, when it's enough, when to take profits, when to move on. Align with your time and energy. Realistic goals must also align with your real-life circumstances. If you're working full-time, have a family, and limited time, don't force yourself to be a full-time trader who has to monitor charts 24/7. That's unrealistic. Choose a suitable strategy. Weekly or monthly DCA. Focus on strong coins only. Monitor your portfolio 1 to 2 times a week. And don't stress over following every new project. Don't jump on the bandwagon just because someone else made 1,000% profit from a Mycen coin. You have your own life, your own time, your own energy. Don't use someone else's map for your own journey. The goal isn't just profit. This is important. Your goal in playing crypto isn't just to make money. Profit is a bonus. But behind that, try to reflect. Do you want to understand more about future technology? Do you want to be financially free in 5 to 10 years? Do you want to build your own business or project in the Web3 ecosystem? Or do you want to redirect profits into productive things like building a house, starting a business, or building a solar power plant, PLTS? When your goals are strong and meaningful, you'll be stronger in the face of storms. You won't waver just because one coin drops by 20%, because you know this journey is long and meaningful. Break your goals into smaller parts. Realistic goals must be broken down into small steps. Example, this year, increase portfolio by 30%. Next year, convert 30% of profits into physical assets. 2 years from now, set aside 50% of profits to build passive income. These steps keep you motivated and prevent you from getting caught up in chasing vague, unattainable big goals. Avoid daydreaming. Having dreams is good, but daydreaming, without a plan, unrealistic, just drains your mental energy. Crypto isn't a magical money-making machine. It's a tool, a helpful one. If you don't know how to use it, you can hurt yourself. Conclusion of Chapter 4. Realistic doesn't mean pessimistic. Don't get caught up in numbers and percentages. Look at the value. Adjust to your time and energy. The goal isn't just profit, but meaning and direction in life. Break down your goals into smaller parts. Avoid fantasies without a plan. Remember, what keeps you going isn't momentary enthusiasm, but the strength of your direction and purpose. If you know where you're going, no storm in crypto will make you give up. Don't just survive, win with style. Crypto friends who are still listening at this point, you're awesome. That means you belong to a rare group. People who are serious, patient, and willing to learn to play the long game in this fast-paced world. Because let's be honest, the crypto world is tough. On one hand, it offers incredible potential, but on the other, it can burn through your portfolio and mental resilience in a matter of hours. And here's the funny thing. What makes people fail isn't because they're not smart enough. It's because they lack patience. They don't have a plan. They don't understand the technology they're using. They don't know when to stop. And the most fatal mistake, they're too confident that they'll be rich by tomorrow morning. Throughout this episode, we've discussed survival strategies that not only keep you alive in the market, but also allow you to grow and win gradually. Starting with the importance of understanding blockchain, knowing how to zoom out, managing your portfolio and funds sensibly, to having realistic goals that serve as your compass. All of this isn't just theory. It's the result of real-world experience, falling and rising in the market, and lessons learned from thousands of hours of analyzing charts, projects, and strategies. But remember one thing. All strategies are just tools. What's most important is your mindset. Because in the short term, the market is an emotional game. But in the long term, it's a game of perseverance and discipline. If you can endure, you win. If you're patient, you can outperform 90% of people who come in with instant expectations and leave with permanent disappointment. 5 important rules by Mr. Suw Crypto. And as usual, before we wrap up this podcast, I want to remind you again about the 5 important rules you must remember if you want to survive and succeed in crypto. Not theory, not myth. These are the rules of the crypto world. Take note. 1. Don't invest more than you're willing to lose. Crypto isn't a place to test your courage. If the money keeps you up at night, you're in the wrong place. Don't use your food money, let alone your kids' school money. It's not worth it. 2. Time in the market matters more than timing the market. No matter how smart you are, you won't always be able to time the market. But if you can endure 1, 2, 3 bull and bear cycles, you'll witness miracles that no FUD can overcome. 3. Diversification isn't just about coins, it's about strategy. Don't just have a bunch of micron coins and think you're diversified. Try varying your strategies, some for long-term, some for DCA, some for farming or staking, and a little for experimentation. 4. Always start with research, not FOMO. If you hear CoinX can make 10x, don't jump in right away. Ask, what's the project about? Who's on the team? Is the roadmap clear? If you don't understand what you're buying, you're just a speculator, not an investor. 5. Don't check your portfolio too often. This is classic. Opening the portfolio app every hour, smiling when it's green, stressing when it's red. Bro, that's not a strategy. That's self-torture. Monitor it as needed, but focus on your execution and big picture plan. Conclusion. So, Mr. Suw Crypto, if you want to survive and succeed in the crypto world, you don't need extraordinary luck. What you need is the right mindset, discipline, and a clear direction. And remember, in a world where everything moves so fast, patient and consistent people are rare. And in crypto, what's rare is usually what's most valuable. Don't forget to share this episode with your friends who are feeling overwhelmed by the market. Leave a comment, give it a like, and help this podcast grow so more people can be enlightened. See you in the next episode. Stay profitable, stay sane, and stay on the long path to financial freedom. Greetings from Mr. Suw Crypto. Peace out.